Hey there, fellow explorers of the digital realm. Have you ever wondered what the future holds for our money? Well, hold on to your hats because we're about to dive into an exciting topic that's making waves in the financial world. Today, we're going to unravel the mysteries surrounding the rise of central bank digital currencies, or CBDCs, and discover what you need to know to stay ahead of the game. But before we embark on this thrilling adventure, don't forget to hit that subscribe button and join our ever-growing community of knowledge seekers. Trust me, you won't want to miss out on the captivating content we've got in store for you. So let's get started. What is a central bank digital currency? Picture this: a digital currency issued by your country's central bank, combining the convenience of modern technology with the stability of traditional fiat money. That's precisely what a central bank digital currency, or CBDC, is all about. CBDCs are similar to cryptocurrencies, but with a crucial difference. Their value is fixed by the central bank and tied to the nation's fiat currency. With numerous countries exploring the transition to digital currencies, it's essential to understand the ins and outs of CBDCs and how they'll shape our society. Understanding central bank digital currencies. Before we dive deeper, let's grasp the concept of fiat money. It's the government-issued currency we're all familiar with, like the dollar or the euro. Unlike currencies backed by gold or silver, fiat money has value because the government says it does. Traditionally, it came in the form of banknotes and coins. But technology has ushered in a new era where digital transactions have gained traction. The pandemic further accelerated the decline of physical cash in many developed countries, making digital currencies even more prominent. Goals of CBDCs. Now, here's the juicy part: the goals that CBDCs aim to achieve. In the United States and many other nations, there's a significant portion of the population that lacks access to financial services. Surprising, isn't it? In 2020, a staggering 5% of adults in the US didn't even have a bank account. And get this, another 13% of adults with bank accounts resorted to expensive alternatives like money orders, payday loans, and check cashing services. Talk about a financial struggle. CBDCs step in as the superheroes of the financial world, aiming to provide privacy, transferability, convenience, accessibility, and financial security to both businesses and consumers. Imagine reducing the costs associated with maintaining a complex financial system while slashing cross-border transaction fees. Plus, those who currently rely on pricey money transfer methods could find solace in more affordable options. CBDCs also tackle the risks tied to existing cryptocurrencies, which can be as volatile as a roller coaster ride. By being backed by a government and controlled by a central bank, CBDCs offer a secure means of exchanging digital currency for households, consumers, and businesses. CBDCs versus cryptocurrencies. Now, let's address the elephant in the room. How do CBDCs differ from cryptocurrencies? The world of cryptocurrencies gives us a glimpse of an alternative currency system where regulations don't hold all the cards. Cryptocurrencies are difficult to duplicate or counterfeit, with built-in security mechanisms preventing tampering. However, they're also decentralized and unregulated, meaning their value relies on investor sentiments and usage, making them prone to wild fluctuations. That's not exactly ideal for a financial system that craves stability. Here's where CBDCs come to the rescue. They mirror the value of traditional fiat currency and prioritize stability and safety. While cryptocurrencies might require blockchain technology and consensus mechanisms, CBDCs may not. With CBDCs, central banks have more control and ensure a level of stability that cryptocurrencies can only dream of. Central bank digital currencies at a glance. Curious to know which countries are leading the CBDC revolution? As of March 2023, 11 countries and territories have already implemented CBDCs. We're talking about places like the Bahamas, Antigua and Barbuda, St. Kitts and Nevis, and more. Meanwhile, 18 countries have pilot programs underway, including 7 of the G20 economies. And an impressive 32 countries have CBDC programs in development. Even the United States, always at the forefront of innovation, is exploring whether a CBDC could enhance their already efficient domestic payment system, according to the Federal Reserve. The future is bright indeed. Designing central bank digital currencies. Designing a CBDC is no walk in the park for central banks. They must carefully consider who should have access to this digital currency. It's crucial for a CBDC to possess all the characteristics of traditional fiat money and ensure interoperability with the existing financial system. Widely accepting and recognizing the CBDC as legal tender within the country is key. The central bank must guarantee the convertibility between the fiat and digital currencies, maintaining stability and trust. Anonymity is another vital aspect to ponder, striking a balance between privacy and security. While a degree of anonymity might be desirable, full anonymity is not an acceptable feature of a CBDC. Additionally, central banks need to decide whether a CBDC should bear interest or not, carefully considering the implications and challenges of adopting a CBDC. Now, let's dive into the implications and challenges that adopting a CBDC brings. Brace yourselves, folks. Banks and non-bank financial institutions will undoubtedly feel the impact. With CBDCs, deposits will shift from commercial banks to central banks, reducing the size of balance sheets within the banking sector. It's an opportunity for commercial banks to innovate and remain competitive, perhaps by offering enticing interest rates or specialized services. However, this shift could also lead to increasing lending rates, affecting small and medium-sized enterprises and individuals with low price sensitivity. Commercial banks might resort to borrowing from overseas to fund their operations, exposing the banking sector to external factors. Furthermore, the adoption of a CBDC requires careful consideration of technology and infrastructure. Some countries have already decided on the technologies they'll use, while others are still pondering how to adapt their current systems. Seamlessly merging different infrastructures is crucial for a successful CBDC implementation. Heading 8. Coexisting with crypto. Now, here's a question for you. Can CBDCs and privately issued cryptocurrencies coexist? Absolutely. There's room for both in this vast digital landscape. However, it's worth noting that privately issued cryptocurrencies come with a relatively high level of counterparty risk. As the adoption of both CBDCs and cryptocurrencies continues, public acceptance, regulatory understanding, and appropriate monetary policies will be vital for their harmonious coexistence. What are some concerns around CBDCs? While central banks are eager to explore the potential of CBDCs, there are valid concerns worth considering. One such concern revolves around taxation. When money becomes digital, it also becomes traceable and, in turn, taxable. This might pose a hurdle to voluntary adoption, as some individuals might resist having their transactions monitored. Moreover, technological stability remains a challenge. Just imagine, in January 2022, the digital version of Eastern Caribbean Dcash went offline for 2 months due to technical issues. Yikes! Additionally, the business case for CBDCs isn't a slam dunk. Developing infrastructure for digital currencies requires significant effort, and the rewards might not always match up. Furthermore, CBDCs may not offer the anticipated speed advantage, since many developed countries already activate instant payments using non-blockchain infrastructure. Some central banks, like those in Canada and Singapore, have even concluded that there isn't currently a strong case for digital currencies. It's a nuanced landscape indeed. The bottom line. So, what's the bottom line here? CBDCs are gaining momentum across the globe, with 11 countries already implementing them and more on the horizon. The primary goal of CBDCs is to provide privacy, convenience, accessibility, and financial security to businesses and consumers. For individuals without access to traditional banking services, CBDCs offer a lifeline, allowing them to be paid, hold their money, and pay bills. CBDCs can also streamline complex financial systems, reduce cross-border transaction costs, and provide cost-effective alternatives for money transfers. The future is digital, my friends, and CBDCs are at the forefront of this exciting transformation. And there you have it, intrepid explorers. You're now armed with knowledge about the rise of central bank digital currencies. Remember, this is just the tip of the iceberg. The world of finance is ever evolving, and CBDCs are set to shape our future in unimaginable ways. If you enjoyed this adventure, don't forget to hit that subscribe button and join our community of curious minds. Together, we'll uncover more mysteries and unlock the secrets of the digital universe. Until next time, stay curious and keep exploring.